Trading in the NFT market operates a lot differently than any other market out there, and it really is all based on human behavior and psychology. So in this video, I'm going to explain how you can actually trade NFTs and use psychology as well as catalyst news to really be ahead of the crowd. Without further ado, guys, let's get into it. Now, like I just said, trading NFTs is completely different, and it's one of those things that you have to get used to. And one of the cool things about it is that there aren't a lot of institutions or major players really buying and selling these different NFT assets. And it's really about different individuals that are trading these different NFTs. And because of that, a lot of these different buys and sells when you want to get into a project and when you want to get out of a project has to do with perceptions and emotions of other people out there. So if you can understand how different news or different events are going to impact people's decision making, then you can now make a buying and selling strategy and that way properly position yourself. Now, a lot of people's decision making has to do with hype and attention. The more attention that is on something, the more eyes that are on it, the more people that are likely to buy it, and that is going to increase the overall volume. So what you have to figure out is there something coming up with this NFT project that is going to drive attention, that is going to drive views to it, and then is this going to be something that impacts people's decision making of whether or not they want to buy or sell? Now, in one of my previous NFT videos in this learning course, I talk about that minting is usually the most profitable and lowest risk thing to do. But these different swing trades, which I'm about to go over, can work really well, especially if you're invested in the right high quality projects. It's all about buying in the boring times when there isn't a lot of people paying attention to a specific project, waiting for some sort of upcoming catalyst, some sort of news or event that is going to happen with that project, that catalyst news or that event bringing a lot more attention and eyes. And that's when the volume increases, giving you an exit opportunity and hopefully a way to make some additional profit in that meantime. Before getting into this, what all do you need to know? Well, guys, the NFT space moves very rapidly and the narratives of what people care about always change. Things that were big news in NFTs maybe 3 months ago are now no longer relevant in some situations. So you have to be aware that not only is the space volatile in general, but what people care about and what people are paying attention to also changes. One of the biggest rules in crypto in general is that attention is the ultimate economy. Volume is based on attention, and volume is what not only provides exit liquidity for your different buys and sells, but it also is what appreciates the price in a lot of situations. The more volume you have, odds are the more price appreciation you're going to see. The key in these different swing trades is going to be buying when attention is at a low and then exiting when you expect some sort of future event to drive a lot more attention to said project. And be careful, guys, since some projects will actually never deliver these different catalyst events or what they said they were going to deliver. And in some situations, they're going to be in a permanent boring phase where they slowly die, or it's going to take a lot longer for them to execute on something than they planned. And that's going to change your time horizon on a specific swing trade. Now, let's get into some of these basic phases before I go over some draws here. So the first phase is when the project actually mints, and this is when the attention is at the highest for a project, and it's very rare for a project to have as much attention as when they first start minting. And that's why a big part of why a lot of NFT projects fail is the attention dies so much after they actually mint, and it's hard for them to get that attention back. And when these mints are first listed on the secondary, this is when it's in the price discovery phase where you have a crazy amount of volume and you have no idea how high or how low that NFT project is going to go while it's trying to discover the real market price. What usually happens in this phase one is you'll have some sort of hype or momentum peak. There'll then be some sort of pullback. Then there'll be a bounce back up, and it'll kind of go sideways for a while until it finds the price that it is going to settle at, that market price. And then over time, attention usually drops down and volume usually drops down. And then you'll have a slow decrease in price until ultimately or hopefully they have something to bring that attention back, which I call a catalyst news or a catalyst event. Then after one of these catalyst events, usually this process repeats. So let's look at a good project, and I'm going to bring up Jelly Cubes because I personally think this is a good project, and we're actually following this exact chart right now, and this is my own project if you guys are aware. But if you look at here, guys, Usually for a good project, you'll have their mint phase. After it gets minted out, the secondary will usually pump as people FOMO because they either slept on it or there's actually a lot of high conviction buyers, or maybe the starting distribution was really great for the project and a lot of people are diamond handing. Now, this first peak or this first phase is the most riskiest time to buy the asset because you have no idea where the price is going to go. So for example, let's say the mint price is $100 and this peak one could be $500. Well, you could buy at $500, which is a 5x, and think it's going to keep going, but then in reality, you just bought the top. Or you could buy at $300 and it could still keep going all the way to 500 and you can make some money, but now you're really gambling because you have no idea how high this is going to go before the FOMO stops. After a peak, you're eventually going to get to the top, and this is when a lot of people are going to start taking profits. And then as the price starts dropping, you have more and more people listing and taking profits because they basically don't want to lose money on this, and everyone that bought the top starts freaking out and they start listing as well. And then that's where you'll eventually get to some sort of bottom. After the bottom, you'll usually have some sort of bounce up after people take their profits, and then you get into this price discovery phase where you go on sort of this wave that gets tighter and tighter and tighter as it goes on until eventually it finds the true market price. And this is where I say the price has been discovered. You had that initial run, you had the initial pullback, you had the initial bounce up, and now all of a sudden you have this wave-like pattern until that price now settled. Now, what's really interesting is as time goes on, the difficulty of actually getting new holders and keeping people's attention when there's all these new projects coming out and places to put their money gets more and more difficult. And this is where you're going to see a slow decline of that project over time in the vast majority of situations. Now, if it's a good project, they'll eventually have something in the future, some sort of major event that is going to drive a lot of attention. And when this happens, you're usually going to have a run up once again leading up to that event. And then this is usually where you're going to want to sell the news. But then what will happen is the price will drop. It'll kind of go sideways once again, and then it'll repeat the same pattern over and over and over, as long as that project is a good project that is going to deliver things and drive back attention. So typically the swing trade strategy would be is minting in this first phase, getting that NFT, try to sell it at the peak or slowly sell on the run up all of your assets, then let it bottom. Sometimes you can buy back in at this point if you think it's a really good hold and you're willing to hold longer term. And then usually it'll have some sort of bounce up. You can do that sort of swing trade if you want, and then it'll be in this price discovery phase. Now, typically, unless you know a catalyst news event is coming soon and you're confident that that project is actually going to deliver that catalyst news in a timely manner, this is where you can start building out your strategy. But if I don't see anything major coming in the future that has been announced with that specific NFT project, then I'm going to try to exit in this first peak just because I don't see anything coming in the future that's actually going to drive more attention. Now, on the other side of things, if I know that they're going to come out with something big that I think is going to drive attention within a 2-month time period, then I can buy back in once the price is actually discovered, because now I know that the downside is a lot less limited. The price really found its floor. And yes, it might be higher than I could have bought in the past, but at least I know it's consistently holding a price. And I'm talking about 1 week, 2 weeks after this project actually launched. Then that's the situation where I can buy in and I can wait 2 months for this next catalyst news. Now, what's really interesting is when this next catalyst news happens, this is where you were already positioned, whether it was in this boring phase where it slowly declined, what I call the boring phase where not a lot is happening, or if you got in during this price discovery phase, and now all of a sudden you're just waiting for this catalyst news to happen. But because you were already positioned, what you're going to do in most situations is just sell on the news. Hey, we're launching some sort of fungible token. Hey, we're coming out with our DApp. Hey, we're coming out with some sort of platform. It can be a wide range of things, but it has to be something that you think is going to actually drive attention to the project and actually bring more eyes to it. And more often than not, you're going to want to sell on this catalyst news, and then you effectively made your swing trade. People are going to buy up this project because of this news. It's going to go down a very similar cycle as we saw before, and then eventually it'll get into its boring phase once again, where now you have to wait for the next thing to come in order to get that attention and exit liquidity, because NFTs are very illiquid, especially in this market right now. And it's all about trading into that volume. And the volume is going to be the highest when the attention is the highest. Now, what's really interesting is this is actually the chart of jelly cubes. And it may seem pretty bad, but I actually really love this chart and I'm excited to see what happens next because I think we pretty much bottomed here. So to kind of give an explanation, we first launched at $100, which was our mint phase. Within the first 3 days, we actually went all the way to an $800 floor, and that was our peak one. After that happened, and you can see it over here, we actually went on a decline, which is this bottom one where people are taking profits and they're like, oh shit, it's starting to go down, let me sell. And this was our bottom here. Then what happened is we had the bounce back up, which went actually above our original peak or around the same price of our original peak. And then all of a sudden we went down again, and it kind of did this sideways thing where people were really trying to discover the fair market value for this project. And then what happened, guys, is we had this slow decline, or like basically people didn't know what to do, price discovery. And then guess what? We had our catalyst news. We announced that you were going to do a 1-for-1 mint for every jelly cube you had. And that was going to be a very fair below market value price of what you were able to get. So then what happened? We went on a massive run. We had a little bit of a pullback, and then we started going on a run again. And this is right where you could have sold your jelly cube before our second mint happened, where we diluted our supply by 2x. So this is where we literally went to 0 listings as a project and had basically a $4,000 floor at this point in time and over a 40x if you had minted over here. Then obviously what happened is once we added in more supply, we started going down and down and down. And this is right here where we're trying to find the bottom for this specific project, and it can take time to do so. And eventually we bottomed, we were in our boring phase, and then all of the sudden we start announcing, hey, we're going to do a new token called Jelly, and it's the first 404 token ever created. And this is that catalyst news that started going on a run. Once we got all the way up here was actually when, once again, was right before we launched our token. And if you got into this boring phase or when we bottomed and you just held, you were able to make an insane swing trade where we went all the way down to, let's say, $1,000 floor or $500 floor, something like that from this massive peak of 4,000. And then all of a sudden we went to the same freaking floor that we had before, where we went back up to $4,000. And then what happened is after we released our Jelly token, people started taking profit, people started dumping. And because of the nature of the 404 token, we pretty much created a liquidity pool that allowed people to basically exit instantly on this liquidity pool. And the whole NFT market was going down, and it was a bunch of different things. But then we started going down and down and down and down. And now eventually where I think we're at right now is we're at this bottom, and we have another catalyst news event coming up, which is these Bitcoin jelly cubes that not a lot of people know about. And I'm telling you, if you're watching this in the future, stay tuned and pay attention to this, because the same exact thing is going to happen where we're going to have this push up, in my opinion, based on this catalyst news. And I think we're going to get right back to where we were previously, or even higher than we were previously within the next 3 to 6 months with the project. Not financial advice. That's just what I think is going to happen. Now, what's really interesting in the jelly cube situation is over here, we took a dip because we doubled the supply. Over here, we took a dip because we provided exit liquidity. The next time we go on a run, we don't have any reason for our price to really drop. And one thing that you'll notice, guys, is when you're doing these different swing trades, once you get to certain levels and you get past those levels, the people that are willing to sell at those levels are now out of your project. So for example, if we're at $500 and we go to $1,000, okay, there's a certain amount of people willing to sell at $1,000. Now we might go back down to $800. Now we go to $1,000 again. Maybe there's a couple more people that hadn't sold yet and they sell at $1,000. Now you go down to $900. Now what's really interesting is next time you go past 1,000, there isn't as much selling pressure, or there aren't as many listings because you already got past that number. So if there were people that weren't willing to sell at 1,000, now those people might be willing to sell at 2,000. But once you get past 2,000, now there's going to be people that aren't willing to sell until 3,000. So each time you break through these levels, you have less and less people that are willing to sell at those different prices, and it makes these moves up even more possible. So in my opinion, with jelly cubes, we had a lot of people that weren't willing to sell at $4,000. So for us to eventually pass $4,000 again is going to be a lot easier than the first time where we hit a wall on both of these occasions. Now let's go into a bad project. A bad project either doesn't sell out, which means you misanalyze the amount of hype that project had. And in most situations, if it doesn't sell out right away, it is going to completely die. If you see a project that didn't sell out right away and did a slow mint out and actually survives and does well, that is a very, very, very rare occurrence. because most of the time you need that starting momentum for the project. You really want to see a project come out at, let's say, $100 and then pump at least a 2, 3, or 4x to really start that FOMO run and to really have a good reputation and a good sentiment in the community. If it doesn't do that and it just dumps down right away, you are now fighting a massive uphill battle. And if you're an NFT project founder, a future project founder, like, listen to this advice. Make sure you underprice your NFTs compared to demand, because you will make way more money in the long run if you underprice it in the front end and make sure that this thing pumps up in the long run. Now, if it's a bad mint, what's going to happen is it's either just going to dump really hard, might have a little bit of a recovery, but then just keep dumping and dumping and dumping. And then eventually it'll have a slow death where it just ends up dying and there's no chance of recovering from this. The second thing that can happen is you could have a mint that has a typical cycle where it'll have this pump up, but then what happens is as it's going into the slow decline and in that boring phase while it's waiting for some sort of catalyst, that catalyst never gets delivered, or whatever catalyst was supposed to happen doesn't actually have an impact because it wasn't a big enough thing to really drive attention and drive value back to the holders. So in this situation, you might have a small pump up when this thing happens, but it might not go above where you originally bought in at. And then now it'll go back into that slow decline and boring phase where it'll just end up slow dying again. So it's really interesting doing these different swing trades. Just make sure that if you are doing a swing trade and you are gambling in a sense by buying in that boring phase when not a lot of people are paying attention, make sure that you know they have something coming up in the future that's actually going to drive attention or actually drive volume or actually drive value or actually drive the needle. Otherwise, you're not actually going to have that attention and that exit liquidity coming in. And realize, guys, that more often than not, you are better off selling on the news than whatever catalyst event that is. It doesn't matter how bullish you are, because speculation and expectations almost always surpass the reality of what happens. And that's why it's important to position yourself in those low, boring phases where volume and attention are low. And then if you know that project is going to deliver, or you know there's something exciting coming up, whether it's Bitcoin jelly cubes, you like the plan, you like the project, the analytics are looking good, whatever the case is, then you can consistently make these different swing trades and make money in a market that's a lot less competitive and a lot less advanced. And that's really where the opportunity comes into play.